In this video, I'll be going through Work Together, problem 11-2 on journalizing treasury stock transactions. This is from page 329 in your Century 21 Accounting Textbook, edition 11. And this is by Gilbertson and Lehman. And also, this is the Advanced Accounting and not the General Journal. All right. Journalize each transaction completed during the current year. Page 12 of your cash receipts journal and page 2 of your cash payments journal are provided in your working papers. And source documents are C for check, R for receipt. Your instructor, that's me, will guide you through the following examples. Right, so January 25th, we paid cash to Mike Stratton for 400 shares of $1 par value common stock, $16 per share, $6,400. Check number 688. So if we paid cash, we will assume it's going to go in the cash payments journal on January 25th. And this is for treasury stock, right? We sold this stock at one point in time, and now we are buying our stock back from Mike Stratton. So it's going to be treasury stock now. Check number 688. And this will be a general debit of the $6,400 we paid him. Okay. And then it should just be a cash credit. All right. Cool. On May the 7th, we received cash from Patty Edwards for 200 shares of treasury stock at $16.50 per share. Okay. $3,300, receipt number 456. So we received cash will be up here in our cash receipts journal, May the 7th. And we are receiving treasury stock. Receiving money for treasury stock. So we are reselling this treasury stock that we bought, right? January 25th, we bought our stock back, and now we are reselling it. So 200 shares at $16.50 per share. Document number, receipt, 456. Okay. So we have treasury stock, and we'll probably have paid in capital, right? Paid in capital in excess from sale because we bought it, or we got it back, or we bought it from Mike Stratton at 16 and we're selling it now at $16.50. So we're making 50 cents on this transaction. Oh. Paid in capital from sale of treasury stock. Cool. Kind of ran out over there. So $3,200 would be $16 per share that we bought it at, right? And 200 shares of it. So equals 16 dollars times the 200 shares would give us a treasury stock credit. And then the rest, we know that she gave us $3,300. That's what the problem tells us. The difference between those two will be the paid in capital in excess, right? So we'll just subtract $100. All right. Now on the 19th, we received cash from Catherine Welch for 50 shares of treasury stock at $15 per share. Dang, we made money on the first ones, we're losing money on the second one here. All right, market must have went down. May the 19th. we have 50 shares of treasury stock. So we'll put treasury stock here. And then the tricky part on this deal is it's going to be a debit on this, paid in capital from sale of treasury stock. Okay. So the treasury stock amount was 50 shares, or at $16, right? So equals 50 times 16, $800 credit. We received 750 cash is what it says, which means we have a debit of the $50 difference. Because our debits must always equal our credits, right? So we made 100 here, we lost 50 on this next transaction. All right, so that is how these journalizing treasury stock transactions go. You have to refer back quite a bit to the original amount that you bought that treasury stock for, so be careful to follow those dollar amounts. All right, so that was the work together, and I'm going to let you do the 11-2 on your own.